So we're here to introduce Dovetail, which is we were talking about the why and the how for
Sure.
India, like why to invest in India. Um, and I would emphasize here today the how, but the how instructs the why because they see, as you'll hear, um, they see investments coming in and to some extent out of the country as a fund administrator and a brand provider of a set of services, and
Right.
they're going to talk about both. So I'm going to hand it over to Rahid and Sarah.
Thank you, Mark. Thanks so much. Good morning, everyone. I hope everyone is from US. Otherwise, good afternoon and good evening too. My name is Rohit Agarwal. I head one of the business vertical for Dovetail. Sareen, my colleague, covers the US market from a relationship management perspective. Quick brief about myself. I am a career City banker. I used to be with Citibank for more than a decade. Spent all my career on the custody side, where I used to work with the global custodians, say like State Street, Northern Trust, PPH, and their end clients coming into Indian market and trading Indian market as an FPI or an FDI. FPI is predominantly for listed equities or derivatives, and FDI is for private investments. So as to cover both and work with the regulators in India, which is SEBI and RBI, for any foreign investors query or concern for their investments into Indian market. I'm heading the India Access vertical for Dovetail. Dovetail is a asset servicing house. Today we manage more than $4 billion of assets, and we have three broad verticals serving asset managers. The first vertical is India Market Access. So any asset manager, fund manager sitting outside India who want to access Indian market, we are or we could be a solution for them. This is a plug and play solution what we provide. So we specialize in creating sleeves or the funds currently from Mauritius and very soon starting in Gift. These are regulated structures, and these are governed and controlled by the investment manager, which is again both in Mauritius and Gift. These regulated funds come and seek a license in the Indian market as an FPI. With this license, you can trade listed equities, debt, or derivatives. The same funds can also seek an FDI account or a license in India. This is predominantly for private investments. Just to give you a color about Indian market, and then maybe we go into the solutions what we provide. India today has a GDP of slightly more than $4 trillion. The Indian capital market, which is custodized with the local custodians, is approximately $3.3 trillion. Out of this, the FPI or an FDI. So FPI is approximately like a $1 billion of asset size, and maybe from an FDI perspective, it may be approximately say $500 billion. So maybe I just said $1 billion for FPI, which is almost like $1 trillion for FPIs, and half a trillion dollar for FDI. So together, both FPI plus FDI for a foreign investor perspective, approximately half of the Indian custodized market is driven by the offshore investors. Today, we have approximately 12,000 FPIs in India, and you'll be surprised to know that out of those, 32% FPIs comes only from the US market. So that's a concentration in the Indian market from the US asset managers, fund managers. From a flow perspective, almost 40% flows in the Indian capital market is from the US market. And this is all published numbers by the asset managers who disclose that they are from US. If you add up large funds which say come from Singapore and trade Indian market, but the think tank or the management still sits in US, the number goes higher, more than 50%. So that's the heavy concentration of US on the Indian capital markets. The second largest flow what we see in India is from Luxembourg, which contributes to 12% of flows in the Indian market. The third largest is Canada, which contributes to approximately 7%. Similarly with Ireland, which contributes 7%. Singapore and Mauritius contributes 5% each. So these are the jurisdictions from where India sees the flow. Indian market has been quite stable this year with the ups and downs globally. Year to date, market has seen an upside of 5.5% compared to 2 or 2.25% globally as an average. So from a stability perspective, the equity is holding up. This is also because the local domestic institutions are giving a lot of support. There are a lot of inflows coming from not only retail investors, but the pension funds and other contributing schemes locally in India are trying to allocate more to Indian equity. That gives a lot of support. Even if the foreign investors sell the market, there are local institutions who keeps holding it up. So that's something which is happening good in India from a support perspective, which is more from an inclusion that a lot of retail investors, HNIs, or these public institutions are contributing the growth of the Indian capital market. Let me just give you a color that what's happening from an India inbound or an outbound perspective. Um, in India, if we want to make investments coming from outside India, there is a small restriction that, if someone who is holding an Indian passport or who is holding an Indian OCI card, they have a restriction to invest into Indian market. If there's a fund which is contribute or which gets contribution from NRIs, a single NRI cannot contribute more than 25%, and together all the NRIs put together cannot contribute more than 50%. That's getting relaxed at a new jurisdiction called GIFT City, Gujarat. So PM Modi has announced a small area within the state of Gujarat as an international financial center, which is called GIFT City, Gujarat. There's a red carpet available for foreign asset managers who are intending to trade Indian market. The whole restriction of NRI limits of 50% has been relaxed in GIFT City. So if a fund manager or an asset manager want to come and they have purely NRI contributors, they can set up a shop in GIFT City, and this GIFT City allows even 100% NRI contribution. So that's something which is happening good from an India inbound perspective. The market on India outbound is also opening up. If an Indian individual or an Indian family office who want to invest into global markets, again, there's a restriction that you can't invest more than USD 250 K per annum per person. That is getting relaxed again if you want to pool money into GIFT City, which means if a foreign asset manager or a fund manager creates a shop, which is a fund and an IM in GIFT City, this fund can accept contributions to the tune of 50% net worth of the Indian family office. And this money can be invested into global strategies. So both from India inbound perspective or from outbound perspective, market is gaining traction, and this new jurisdiction, which is GIFT City, Gujarat, is catching a lot of eyes. Yesterday, it's a very, very latest development. Last evening, GIFT City regulators have permitted platforms in that jurisdiction, which means if an if a foreign asset manager want to trade Indian market, uh, up till now, there's a rule that you need to go and set up a fund and an IM in GIFT City. You need to prove a substance, which means hire people, have an office. That is being done away with. So you don't have to come and set up a shop. You can rely on an existing platform, and this platform can give a substance to you, similar to UCITS, where the mancos can give the required substance, and you can just create a fund and can trade Indian or global markets. So that's a news coming in since yesterday. The regulations are yet to be out, but this is a big development which happened yesterday in India. Coming back to Dovetail Solutions, right? If a foreign fund manager or an asset manager want to trade Indian market, there are two options. The first option is you come to SEBI. SEBI is a securities regulator in India. You come to SEBI, seek a license, and once you have the license, you can start trading. But this has a lot of nuances. Now, when I say nuances, the whole process of taking this license is not easy. It's a very paper heavy market, and a lot of declarations, paperwork, constitutive documentation, declaration of ultimate beneficial owners, both the ID copies of these UBOs. So tons of things are required to seek this registration. And once you get the registration, you are also exposed to the regulatory changes. You have to deal with the counterparties, which is your tax agent, your broker, your custodian, your administrator. So unless you have a support or a team to manage it, trading in market all on your own becomes a bit heavy. That's the solution we brought in. that and coming from whole custody background knows how these things function. We created funds platforms. We created these funds platform for the ease of fund managers, asset managers, that if you want to trade Indian market and you just want to focus on your trading piece, I can manage everything else for you. So I can create a fund for you. I can create a sleeve for you. These are purely regulated funds or sleeves. This can go and take a license from SEBI as a Cat 1 FPI so that you can only focus on your strategy or your trading. Rest, everything can be taken care of us. And this includes the whole operational support, the mid office, back office, the compliance oversight, the regulatory filings, tax filings, getting the fund audited, everything is taken care of by us. So it's like a plug and play solution where you just focus on either raising third party money or your own money and telling us where to invest. The rest, everything is done by us, right? So we got a couple of licenses right now in Mauritius, which is a multi-class license, PCC, which is a protected cell company, or a VCC license, which is a variable capital company. We have got all these three licenses in Mauritius right now. Our investment manager is also in Mauritius currently. This is a large IM 8-year-old history managing $1 billion, and also regulated by SEBI and FSC. FSC is SEBI's equivalent in Mauritius. So again, a highly regulated IM having its own staff in Mauritius. So we have 9 people sitting in Mauritius from a place of effective management poem perspective, and to prove the substance, which makes the whole structure quite heavy regulated and stable from investor point of view. The two licenses what we have, which is a PCC license and a VCC license, these are completely segregated structures, which means if I open a scheme or a sleeve under this license, this is completely segregated, only created for you. The assets and liabilities of one cell don't spill over to another cell. You get the cell audited, the P&L, balance sheet, everything is available to you. The cell gets a tax ID in Mauritius and the bank account in Mauritius. Also, it gets a tax ID and bank account and a demat account back in India. So completely isolated structure, only created for you. This gives a lot of comfort to asset managers compared to the earlier structures what were available in Mauritius way back in 2017, which were not segregated. So after 2018, the market really moved and the regime changed in Mauritius, and they started permitting the segregated structures, and we got these licenses in Mauritius. I just told you what's happening in Gift City, Gujarat. Gift City just approved the platforms to run in Gift City, and now we're going to replicate what we do in Mauritius also in Gift City, which means if you want to trade Indian market not from Mauritius and you want to come through Gift City, I can also offer that, right? So I've got my IM in Gift City, and under this IM, I can create a fund for you. These are again segregated funds only created for you, and these funds can trade both Indian market and global markets. So all these things are available, and that's the first business we do, which is giving India market access. Yeah, these are purely plug and play solutions. The second business for us is derivative clearing. So if a fund manager trades FNO or derivatives in India, we can also clear those trades as a regulated clearing member. So we work with all the 3 exchanges in India, which is BSE, NSE, and MCX, and can trade indices, stock, commodity, and currency. So we have all the three licenses in India to clear your trades. It's a decently large shop. Today we clear more than a percentage of India's derivative volume, and the systems what we use are state of art. So our turnaround time to clear a trade is less than half a second. Also because we work with a lot of hedge funds and algo funds, and they need this kind of velocity because the broker margin gets blocked when the trade is executed. Once a clearing member take up the trade and face the CCP, the broker is out of the hook, right? So for me to confirm the trade as a clearing member is very, very important, and it has to be really quick so that broker is out and I face the CCP, so that the margin is available for the broker to execute more trades. So that's what we do on the clearing side. We are also a regulated fund administrator in Gift City, Gujarat. So we compete with, say, Apex or NAP Consulting or IQ in Gift City, and we are one of the largest administrator there. 30 people sit in Gift City for Dovetail, and we work with so out of 10 Indian AMCs who have shop in Gift City, we act as an administrator for 6 of them. So more than 50% of the market volume from a AMC perspective. and then a couple of global funds which work with us where we act as an administrator. So in all, we have some 32, 33 clients in GIFT City, Gujarat, and where we act as an administrator. We also help fund managers to set up their shop in GIFT City. So we do dual roles. One is setting up the whole structure, like a fund, IM, or you can come on my platform, and then managing those funds as an administrator. And under administration, we do four broad activities, which is the KYC and onboarding of your investors if there are third-party investors coming in. And this also includes daily monitoring, the world check, checking the IDs are live and intact and active. That's a daily exercise for us. The second activity is where we do fund accounting. Now, this is very important because we do accounting on a system called Geneva, Edwin Geneva. This is again a very high-end system. We were the first one to bring this system onshore in India. And this system is used by hedge funds, which is known for series level of accounts. So I can create NAV at an investor level, and I can do the pricing, the management fee at an investor level, demarket the investments at an investor level. So all these things are permissible onto the system. And so that's a system what we use on accounting side. We also act as a corporate secretary where we can monitor your policies in GIFT City. We can become a level 2 signatories from a maker perspective. So we can manage all these back office, mid office things. Lastly is compliances. India, is a very, very heavy on compliances. On top of that, there are additional compliances from GIFT City because there's also an SEZ, Special Economic Zone. So in all, there are some 50 odd compliances which needs to be taken care of. As an admin, we also do that. So we not only monitor, but also goes and execute the compliances, and we report back to the fund managers or their compliance officers that this was due and this has been executed. And we've also created a dashboard. It's a client interface dashboard what we have created, which clearly shows that what is due, when it is due, why this compliance, the whole regulatory backing. And once we go and execute, the acknowledgement is also uploaded onto the system. So that's also available as a service for us, which is unique on the street. No one does that. So yeah, these are the three broad services. First is India market access through our platform. Second is if you're trading derivatives, we can do post-trade clearing for you. And if you want to set up your own shop or you want to come as a platform player in GIFT City, we can do that as an administrator. So trying to cover small, medium, and large asset managers from every perspective. And the forte is to give India market access to you. Work with 22 odd brokers in India. And what we have also done is we have registered our funds in US, UK, Singapore for the purpose of capital raising. So our funds are SEC registered and can also issue K1s to US investors. So that's the annual compliance what we do. Similarly, if you're raising money from UK or Singapore, we are registered with UK NPPR and MAS under Section 305 in Singapore. Mind it, we are also HMRC compliant. So if there's a UK investor who want to invest into Indian market, they would need a fund which is HMRC. HMRC is His Majesty Revenue and Customs. So a UK investor investing into a foreign fund usually pays a capital gain tax of 45%. But if they invest into a fund which is HMRC compliant, the tax really reduces to 24%. So we're also compliant with that and happy to get these funds registered into multiple other jurisdictions from where you are able to raise capital. But that's again a value add available, especially catering to US investors. I'll take a pause. If there are any questions, happy to address that. Otherwise, let me know if you want to deep dive into some particular topic.
Right, there were some comments in the chat. You might want to take a look or questions.
Okay.
So,
Anyone
I have a question. So, so that's great information. Frankly, it was a little bit overwhelming for me. Lots, so it's not clear exactly how many options there are. Are there 2 options? Are there 10 options? Are there, this is US, the people on this call are US specifically, right? So a lot of the acronyms people are not familiar with. I didn't, I go to India frequently, but I didn't know what half of these things are. So, as I talked with Sareen, a little bit of perhaps documentation to separate these things out would help, so that because there are different levels of, in my experience, right, there are different levels of investments that people look to make with different timeframes, right? So let's say if you're looking at just there's private markets, there's public markets. obviously India markets are doing well, right? Now, what are the implications, right? So let's say for a US investor putting money into India public market, then it would help to have some clarity around that. What are the modalities at different levels of investment, right? Are there some tiers? And then on the private side, if there's private transactions, if we're investing into, say, AI companies or manufacturing or whatever else it is in India, then what are some, perhaps an example or something like this with some of the implications, because it's not clear, right?
Sure.
Obviously, we can engage right with your firm and so on and go into a deep dive, but some kind of summary would be helpful, because
Yeah.
sometimes what happens is we get investors on our side as well, or opportunities, and we'd like a way to, I at least would like a way to uh, to summarize and say, okay, if we were going to go into India, right, expand into India, invest into India, look to obtain returns out. Here is a basic approach, right? Perhaps, right? And then we can come to you and say, okay, this is maybe what we're thinking, and is that the right way, or is there some other way? And then go deep from there. Does that make sense?
Sure. Yeah, sounds good, and we can make something for you very, very easy.
Any other
So
questions? Josh or Alfie?
So I had some further questions, Rohit,
Yes,
which is say, if you look at a sector standpoint in India, right? So India is obviously kind of at that is at the place where the China market was, probably maybe 2 decades ago. What are the main growth areas you're seeing? Sort of what does the real estate market look like in India versus, say, specific tech sectors? Obviously, software and AI has been a big kind of thing in India for a long time. But then what
Yeah.
about other asset classes like manufacturing or other or industrials?
Okay.
What are your thoughts?
Thank you
What
so
are
much. I know I don't have to say it, but I just want to make
if you can perhaps give some sense, or where the action is there.
Sure. So, Samir, banking is an action. The whole inclusion of larger population and the products these banking players can provide. So, if you're looking for listed investments in India, don't leave the banking sector. That's one of the sector one should always be invested into. Real estate becomes very choosy, right? The real estate in metros is highly priced. Similarly, if you can find some good real estate deals in non-metro sectors or non-metro locations, that's a very lucrative deal, right? Again, what you can do is you can also invest into REITs like alternate into real estates. These can also be a good option for foreign investors to look into, because they find both residential and commercial deals. Commercial, again, from a high yield perspective. So all these things are available for FP investors. And from a other sector perspective, manufacturing, again, that's something which should be looked upon. That's a very high growth sector. Also from anything which related to new technologies, say like an EV, again, a very high growth sector for India. A lot of players coming in, giving a lot of value unlocking to investors. Anything which is space related, doing any small or big technology on space, that's a highly talked upon sector. We have seen our clients investing into a lot of space tech companies, and we have seen the growth of their investments. It's really giving good gains to them when they do these unlisted investments in these kind of sectors.
Thank you.
And
So we
Samir,
have a
when we
few
will give
other-
the write-up to you, sorry, Mark.
I was just going to say we had a few people that were in the waiting room, and I was moving devices. I didn't see them. So Anthony and Abhi and Leslie. Leslie's active in emerging markets. Anthony as well.
Okay.
I don't necessarily want you to repeat, but maybe you could is there a 60, 120-second version? You could just re-summarize what Dovetail does for,
Sure. Sure, Mark, we can do that. Hi, Anthony. Hi, Leslie. Dovetail is an asset servicing house, and the whole objective is to work with the global asset managers or fund managers to give them India market access. Any foreign investor looking to trade into Indian market, if they come directly to the regulators and try and seek a license to trade Indian market, it becomes a bit paper heavy and very, very regulatory heavy because there are multiple regulations, two regulators to face, which is RBI and SEBI. SEBI is a securities regulator, and RBI is the banking regulator, Reserve Bank of India. Uh, to give this a solution, what we do is we run with funds platform, which means if you want to trade Indian market, instead of coming directly, you can come to our platform. I can create a regulated fund for you or a sleeve for you. This will be under your name, which will seek a license locally in India and will give you the complete access to trade Indian market. The whole objective is that you focus either on raising third party capital and trading Indian market, which is the fund management, and leave everything else to us. So the whole fund management from an operational perspective, regulation perspective, talking to all the counterparties in India, ensuring your trades are settled here, be it cash equity or private investments or derivatives, everything is managed by the fund. So there's a team who will manage end-to-end solutions for you, and you can only focus on fund management, which is taking trading decisions, or if you want to raise third-party money. So that's the whole objective.
Maybe Rahit, you could also talk about this, the size, the volume of assets that you have through your clients.
What we manage currently, Mark, is that what you say?
Correct. Yes.
Okay, yeah. So as a group, today we manage $4 billion. Out of this, $1 billion is all foreign assets coming into Indian market and trading Indian market, and this could be spread across listed or unlisted, and within listed could be equity, debt, or derivatives. But today we manage almost like $1 billion, and this is spread across 50 plus funds, what we have created for different asset managers across the globe who trade Indian market. So that's the value and volume today we manage. From a clearing perspective, the second business of ours, where we act as a derivative clearing member, we manage more than 1% of India's trading volume, where we clear trades for FPIs and local regulated institutions. On the admin side, we also act as a fund administrator, but we do this from GIFT City, Gujarat. This is the latest International Financial Service Center announced by Mr. Modi, where we act as a fund administrator and compete with Apex, Citco, Ascent, IQ, and we manage more than 50% of Indian AMCs who have shop in GIFT City. And from an asset perspective, almost $3 billion of assets what we do on the administration in GIFT City, Gujarat. So that's the volume we manage from our three business verticals. Today we are a 140 member group. We have presence in Mumbai, in Mauritius. We also recently got approved by DFSA. So we have a presence in DFC. We hold a Cat 4 license in DFC. This is a sales office what we have in DFC. And we work with external asset managers, the DFC regulated asset managers, giving them India market access. We've also registered a company in Singapore. This is to expand our admin business. So we want to compete with, say, Apex or Citco in Singapore, and we want to work with the regulated VCC structures, which is variable capital company structures in Singapore, as an administrator. So that's a brief summary about the group.
Great, thank you. Any questions? Maybe Leslie or Anthony or Abhi, since you're new.
One sec, Mark.
Sure. Or Leslie?
Hi, hello.
Yeah,
Can you hear me?
go for it,
Anthony.
Anthony. Yeah,
Hi.
Anthony.
I have a reverse question. What about a US product and or manager, or I beg your pardon, non-Indian, that wants to promote their non-Indian asset fund within the community. Is something like that feasible, possible from your perspective within what you do? From two parts. One, structuring it so that it is friendly, compliant with on and or for the offshore allowance that Indian investors may or wish to require.
Mhm.
And then secondly, from a marketing point of view. So really those two verticals, meaning the manager would provide the return stream and the asset mix and so on, deal with the investment side. And your side would streamline it so that it's compliant, A, for the local market, and B, for the local market that has their limited allowance to go offshore. Yeah, if that's applicable.
Sure. Yeah, Anthony, our expertise is on the structuring side. We understand the regulations. We know how to create structures which are totally compliant from a local regulation perspective. So we can create a fund for you, and this fund will be totally compliant to raise Indian capital. We are not into distribution. We work with third-party distributors. So happy to connect you with the distributors or the wealth guys in India who can market global strategies to Indian families. So we cater to the whole structuring and the regulatory piece and work with third parties on the marketing piece.
So just on the offshore allowance for Indian investors, my understanding now is there is an allowance, a couple of $100K per year. Obviously, it depends if it's, what category, retail, high net worth, family office, institution, etc. And my understanding is that those that are seeking investments outside of India, whether it's hedged back to rupee or in the foreign currency, would use a traditional vehicle to do that. That might be provided by multiple global asset managers, aggregators, etc., around the world, right? That's sort of how it is now. But this is obviously another conversation. It'd be interesting to see again the marketing on the local side, and then if there's a way to do it so that as a complement or alternative to these people that can invest directly in XYZ fund based Cayman, Delaware, wherever it may be, there would be this sort of Indian component where there was some, whatever that relationship is, whether it's the currency hedging or a class of share, which I don't think exists now, that would be more immediate. And obviously it would have to be explored, whether that was Gift City or Mauritius or whatever, right? Yeah.
So, Anthony, you're right. The market is very restricted, but it used to be restricted till October 2022. And the rule was that any Indian family or an Indian resident who want to invest into global strategies, the limit is $250,000 every year. So very small amount permitted. In October 2022, market opened up, and the Reserve Bank of India, which is the central bank, they have permitted that families can contribute 50% of their net worth, but they can only contribute to a fund which is in Gift City, Gujarat. So the only relaxation to the families is that they can contribute if the global fund manager has a fund in Gift City, Gujarat. They can pull in the money to the tune of 50% net worth, and this gift fund can feed into your global strategy, which could be in Delaware or Cayman or anywhere. And then you can do diversified investments from that structure. So gift fund will act as a feeder fund to your master fund, which is overseas, and then you can run your strategies, what you're running currently. So the only way to get large Indian money is to have a presence in Gift City, wherein you can pool large money. And this opened up in October 2022.
And this is a facility or structure that you're providing.
You're right. We have an expertise on these structuring, yes.
Thank you. Thanks for the clarity.
Anthony, have you invested in India? Public
I have
stocks?
invested in India. Can you hear me?
Yes, yes.
Hi, I have invested in India in numerous ways over a long period of time, publicly and privately. And obviously, from a clothing manufacturing side, that was always one of the core hubs going back 10, 20, 30 years with the expertise in manufacturing. And that obviously continues today. But there've always been prevalent Indian companies, which you yourself would know, Mark, from your accounting days and so on. So Infosys, if you go back to the 90s, was prominent. Had some turbulence, but nevertheless. So there've been several Indian companies, and then obviously the Indian banks, large, small, and middle, have had a ballistic rise over the last 30 years that have tapped into the parlayed with the consumer, and also on an institutional level, just the whole unfolding of India, right? So now clearly India has become, from what I understand, more democratized in that there's never been more of a, call it a tailwind to support growth, and so on. So that's what that's kind of in a nutshell what I see now. I think from the private point of view, like everywhere in the world, it's very critical that there's an alignment, and so on, because India, in my experience, is more diversified and bifurcated than most large economies, meaning that there's, the way I see it in a naive sense, is that there are multiple economies and streams within the river, and they don't all speak the same language, literally the same. So the hope is that the structure, the ethics, and the the core essence of good business is aligned now, because I think in the past it's been very turbulent. In terms of all the different things that have been going on, and interpretations. Yeah, but that's the short. So I think that India, if you seek growth, which I think also will come at a point of being future uncorrelated with what's happening in other clusters, whether that's Europe, UK, US, or other parts of Asia. So that's I think another good tailwind, that it's sort of going and at its own beat, and that the retail end user consumer has been and has a reason to be unlocked, right? And so, given the amount of people and the given the amount of people and the incentives that they have, it all bodes well on a macro and fundamental level. That's what I would say.
Right.
On the public side, the last thing I'll say is, on the public side, it's been thought to be a little rich, like the valuations, right? But that's that's conjecture. That's just an opinion if something's richly valued or not. And I think that's what we're seeing now.
So that's useful to know. I asked so that Dovetail would understand where you're coming from, and maybe we'll come back to maybe some of the mechanics questions, and we'll also come back to that other question, your original question.
Yeah, we can talk about that offline another time and see how that can, to do there, Yeah. Because as you know, I've got some things brewing, and I'm trying to align it to what, where, and how, and this could be part of that. Thank you, Mark.
Yep. I see Samir's got his hand back up.
Yeah. So question again for Rohit, which is the So you mentioned real estate, right? Obviously, there's been a big run up in the cities, right, in the metros and towns, and you mentioned, let's say, rural or let's say outside of the metros in terms of where the opportunities are. Um, what do you see as the prognosis? If you look at China, for instance, right? So China, they went way overboard in investing, and so you have a huge sort of overhang now with deflate, this big deflationary aspect in terms of where real estate is likely to come down. What do you see happening in the Indian metros? Is there a saturation point? Do you see kind of some kind of recovery, and then perhaps a better time to invest into metro real estate as opposed to outside?
Uh, See, the whole story about India is that you get migrants coming from upcountry locations to metros. I mean, that's a story which is not hidden, right? Because the opportunities lies in metros. So there are always pockets available. So if you really want to invest and want to be concentrated in metros, still you will have an opportunity. And my suggestion would be look for those kind of opportunities because this will be completely liquid, and you will always find some value because the kind of
So
income levels
what do I
up.
have to do again? They have to do what? I'm sorry, 1 second. They have to do letter of request. Yeah.
Avi, are you asking a question to us, or are you on another?
I think he's on another call. If you can mute him,
Okay.
Mark.
Okay, carry on. Sorry.
Yes, Abhi. So, two factors. One is the income levels of people in metro and the level of migration happening from upcountry to metro. So these things keep the demand always on the higher side of pockets which are yet to be explored. And you might be hearing, right? A new airport is coming. Expanded areas for residentials are coming, even for business areas. If you know the whole BKC story, right? When Reliance and Jio came up and they expanded the whole BKC area, the value just got unlocked. People who would have invested in BKC at that time
What's
really saw the
BKC?
upside. This is a commercial area. It's called Bandra Kurla Complex. It's in the heart of Mumbai, and it was more of a deserted area before Reliance decided to set up their huge office and park in that area. So these are the value unlocking of pockets which you find in these even in the metro locations. Um, if you compare with non-metro, it's very difficult to find a deal because only the local players be able to find a better deal. Finding in metro is comparatively easy. All the large brokers, all the large institutions sit here. So maybe focus on metros and try and find pocket which can do a value unlocking at a decently or forcible future. So that would be my suggestion. Again, from an investment perspective, right? As an FPI, you have access to the debt papers issued by these real estate companies. You have equity available because there are many of the listed companies are large infra and real estate players available on the public side. So you have both the things available, either from the public side or you want to invest into debt of these companies, or even private side, right? So that's again, that's like a deal hunt for you. Very difficult to get, but if you have someone who can get these deals for you, nothing like it.
So a follow-up question to that would be: are you seeing the emergence of any funds that, let's say, specialize in these different areas, right? Say India metro, versus India non-metro, so on and so forth, so that they can we can outsource some of that work to them.
Yeah, definitely they are available. We can see if we can find something for you. I will also try and pull out a real estate focused research report for you. So, large brokerage houses do these kind of analysis and come up with reports. I've noted it down. I'll see if I can find some report for you. And if you're keen, maybe we find some contacts for you who can find some good deals.
Because that's what it seems to me, right? That obviously the run-up has been in all of the big cities, and the reason is because the infrastructure, right? That basically, when you look at so the difference between, say, India and China, particularly, is that China did a lot more, because of state support. They invested a lot more into rural areas, so the infrastructure, the quality of infrastructure, roads, power, water, so on is much better. So as a result, you get a lot more development that's been pushed out into those rural areas, whereas in India, you see much more of a discrepancy, right? Where the real estate values in big metros are, ridiculous, right, compared to what you see, outside of those. And I mean, we've definitely seen some froth, right? That for some of the luxury apartments in, I mean, not even in Mumbai. I mean, even just obviously in kind of the Delhi Gurgaon area and so on. The prices are ridiculous, right? So there's no way they can support those actually. So my sense is that there's a bubble, right, in some of those assets, in terms of the concentration. And at some point, we're going to see this kind of migration outwards of capital. And I'm looking at, say, Germany after World War II, right? So Germany was completely destroyed. One thing the German government did at that place when they were rebuilding, right? They had to rebuild from scratch, right? So one thing they did at that point was to push a lot of investment out into the villages. They made sure that the roads and the rail and everything else was very high quality right across the country. Which meant that you had much less discrepancy between, say, the metro areas and the non-metro. That's something that, say, Modi government is working on, but obviously in India, that's a huge exercise, right? So what do you see as the prognosis for improvement of infrastructure outside of metro areas so that then the discrepancy can, be alleviated over time?
So as a matter of fact, a lot of infra or allocation is going on non-metro. So the central government is allocating a large resources or large capital for developments in non-metros. I hail from non-metro location. I can tell you from a ground level experience. The connectivity between two cities in a non-metro is much, much better what it used to be like 7 or 8 years back. So this government has clearly reshaped the infra on the non-metro side. While metros are having their own share of allocation, but a larger allocation is going on non-metro. So you're absolutely right. The infra focus on non-metro for this government is a focus area. They're doing a lot of things. If I travel from one city to another, it used to take, and by road, you just can't imagine going because of the level of infra available. You just go either by a flight or a train. But today, traveling via road between two cities in India is a reality. I mean, you enjoy that ride. So a lot of things are happening on the ground level.
Thank you.
Other questions? Well, we're coming close to an hour here, Rohit. Sorry, and I guess it's a good sign. And it's getting late for you in
No
India.
problem.
Hopefully the rain has abated.
I can see it's clean to go now.
Okay, good. That's good. Good sign.
Just
Um,
Mark, if I can just on a parting in conclusion, I just wanted to
Sure, go
let
for it.
everyone know. I mentioned it in the chat as well that me and Rohit, from time to time we do visit US for our roadshows, whereby we meet our existing clients and meet a lot of prospects who are interested in India. So, in a few weeks' time, which is 14 July, we will be in Chicago for a week, and post that we will be in New York. So in case of any interest to discuss Indian markets further, or probably anyone who is looking to invest in India or is in an exploratory stage, me and Rohit would be more than happy to take some time out and meet them over a cup of coffee.
Also
Happy to
for
discuss India.
Also for Anthony, if you want to raise money from Indian market, we have an expertise on the structuring and we can set up something in Give City for you.
So just
Great.
a
Thank you.
Anthony, sorry, couldn't hear you.
Sorry, couldn't hear you, Anthony.
So yes, thank you. We will coordinate and look at the New York dates to continue. Thank you
Great.
for your time today.
Sure.
and
You take care.
just a comment that also West Coast is particularly Bay Area would be an obvious candidate for you guys as well.
Obviously, Samir is obviously not in Chicago or New York.
So I'm in California, but you know, so and obviously
Right.
we have
No, no.
a lot of we're well, let's say, you know, India affinity is well represented on the West Coast. Let me just put it
Yeah,
that
yeah.
way.
Sure, we'll try and cover that.
Okay, well, this is the first of many refocusing on India and in partnership with Dovetail. So thank you, Dovetail, for your time, Rohit, Sarin, and everyone else for coming, your questions, and we'll keep these conversations going.
Sure, looking forward. Thanks, Mark, for this platform, and thanks everyone. Samir, Anthony.
Thank you.